Hi guys, Han here. Today's video is short tutorial about trading, margin trading, cryptocurrencies. So I have this popular exchange, Bitfinex. I'm not sure it's super popular, but it's the one that have the ability to do paper trading. Paper trading is the essentially when you do paper trading, they give you an account that has fake money. This is equivalent of having a testnet on the coin. Things will be free and you can experiment with the UI without fearing to lose money. So to have a paper trading, you create a normal account and you can have to create a sub account. And in the sub account, you say that it's a paper trading account. Then when you log in on that username, you'll be directed to this website. Well, it's the same user interface as the normal one, except that things are in yellow here. The tickers are all in yellow, and there's a reminder that this is a paper trading account only. Also, if you go to the balances, you see there's this button, refill paper balances. And if you select this guy, you can put money in this account or remove money from this account without going through the normal interface, which is wallet, deposit, and withdraw. These two will not work, actually. Alright, so how does this stuff look like? You have, so first, you have several tabs. You have several panels, tickers, order form, balances. Okay, let's go to exchange mode. Positions and orders, order history, depth chart, and there should be order book somewhere. Yeah, order book is below. Okay, so what are these things? The first thing that need to be aware of is this ticker. We have a bunch of cryptocurrencies. They're all here. BTC is Bitcoin, and they have a symbol, a code. BTC would be Bitcoin, Matic would be Polygon, DOT is Polkadot, and so on and so forth. So these tokens, these names here would be the name that you expect for these cryptocurrencies. Then when you trade, you actually trade one thing against some other base currency. For Bitfinex, I think they only have trading against USD or USDT. If you go to a platform that is more about crypto, you will have pairs like for example, BTC versus ETH. In this case, the currency would be, the trading currency would be BTC and the base currency would be ETH, which means that if you buy something, you will be buying Bitcoin and then you'll be paying in USD or ETH. So that's the first concept is the ticker, the symbol. The second concept is the trading pair. Trading pair is always going to be trading currency and then base currency. Alright, so if you select one of these, first we have to be in trading, this guy trading, and we need to choose order form exchange. That's the simplest form. Then you can look at the balances. At this point, you should look at the exchange balance because you are doing trading on the exchange. And these are the stuff that I have in my portfolio. Normally, you would deposit these guys by going to wallet and doing deposit. But here you can just do that by doing refill paper balances. Then, okay, let's say I'm selected BTC versus USD, so I click on that. And this chart now shows you the historical prices of that pair, BTC versus USD. You can change the range, right? You can change the range. You can draw lines. You can zoom in. You can zoom out. You can pan, the classical stuff. This chart here is actually coming from a very standard tool, coming from a company called TradingView. So that's why they have a TradingView here. So you will see this chart on many different websites. It's going to be the same look and feel. If you are not familiar with this type of charts, what they show is here is that on each time interval, and the time interval is configurable with these buttons here. We have different types of charts, but the default one is candles. and the interval here is 30 minutes. So you have intervals and you have the range here. So this chart is, I don't know, for example, I want a chart for 1 day. So this is going to be just 1 day. And each candle here, each little bar represents 15 minutes. And in these 15 minutes, you have one candle. The candle has a solid part and it has a thin part, a thick part and a thin part. The thick part is represents the price where we enter the candle and the price where we exited the candle. Right, so the price at the point we entered that time interval and the price at which we exited that price interval. And the color is whether it's either green or red, whether it's green when we exit it going up, and it's red if we exit it going down. So what we can say for example, from this candle is that we enter here and we exit it here. In between, in this 15 minutes interval, the price could have gone higher or lower than the exit price. Therefore, to indicate that, you have a thin part. So the thin part of the candle extends from the low to the high. And you can see here that, for example, in this candle, the price has deviated much more than it looks, because it seems like it entered and exited at about the same price. But in fact, during these 15 minutes, it has gone down and then back up. Below you have a bar diagram, bar chart, that shows the volume traded at that particular time interval. So you can see here that it's a lot of people have sold. All right. So again, the color is green when more buyer, and then red is sellers. Okay. So that's the chart, and then of course at the end you have your current price. The stuff in white here is because I have currently a position. So we're gonna ignore that stuff here. We will ignore the position and just consider the green part. So currently the price of Bitcoin versus US dollar is 42,000. So that's the chart. Then if you want to do something, if you want to trade, the next interesting thing would be, first will be your position. Position is what you have in, what instruments you have already purchased. So ignore this because this is actually coming from margin. I have 0 position in exchange, and you shouldn't see that guy. You will see that guy when we talk about margin trading. And then you have orders. Orders are the let's say I want to buy something and I want to sell something, so I want to buy something, so I will place a buy order. But if, for example, I want to buy at a lower price than the market price, then my order would not be executed. There's no order outstanding that will fulfill my buy order. Nobody wants to sell at the price I'm setting. Therefore, the order will be queued, will be placed in the waiting list, will be placed here, and it will only be executed if the market moves in my favor. In that case, if the price goes down. So then you have order history. Order history is simply all the orders that are made in the past range. So we can have a full order history, or you can see just the last few orders you have done. If you look at the order history, it's you recognize the trading pair, and you recognize whether it's the type of order by the color plot here, color dot. Red if you sold, green if you bought. In which type of order? The context is whether you did an exchange purchase, an exchange order, or you did a margin order. So at this point, we're only talking about exchange order. Exchange orders are the normal orders that you make. You buy and you sell something, and it changes your portfolio, your wallet. Then the type is whether you need a limit order or market order. We're going to talk about that. Then the quantity that was traded, at which price you made the order, and then you have the average execution price. So the thing here is that these guys are most of the time going to be identical. Right? On this case, it's all the same, except for this order here. So what happened for this order is that I wanted to buy up to 42,271, but actually the market moved in my favor and the price went down below this price that I set. Therefore, when the order was executed, it was able to be executed at a lower price. So this is in my favor. When I set a limit price, it's always going to be lower than, lower for buy order and higher for sell order. So it's going to be in the right interval. Leverage is, we'll forget about this. It's how much you, well, it's really not important for us. The status of the order could be just posted, meaning that there's nobody, the order was put on the market, but nobody has taken it yet. So we have all the order will be partially filled, meaning that some people, part of my order, part of the quantity of the order was executed, but not all of it. And this one is fully executed, so everything is has been done and the order is complete. And then it says at what time the order became inactive. So inactive could be because it was fully filled, or it's because you canceled it. Then below you have this depth chart. So this chart here is actually very related to the order book that you have below. Before we go to the order book, you have the trade history, which gives you all the trades that have happened in the past, recently. So when it says here, this guy here means that at that time, somebody bought for 0.093 Bitcoin at that price. And so this, of course, this is not necessarily you. This is what the activity that happened recently on the market. Alright, so this guy here, the order book, is the most important part because it lists all the orders that are outstanding on this exchange. On the left, you will have the buy orders, and on the right, you will have the sell orders. So buy is always green and sell is always red. The prices here are the prices that these orders are set. You have a bunch of them. You have a lot of them, and it goes below. There are more orders than that. If you want to see the full order book, you click on full book, and it's already too much information. So the order book that you have here is gives you is sorted by price, and at the top are the orders that are closest to be executed. So here for buy order, it means the highest price at which somebody is willing to place an order to buy. So for example, if you look at this one, it means that it's changing in real time, of course, but this one says that somebody, because there's only one person, the count is one, wants to buy Bitcoin at $42,033, and he wants to buy 17.9 Bitcoins. So the quantity here is always a quantity in the trading currency. This is not a guy who wants to buy $16 of Bitcoin. He wants to buy 16 Bitcoins. And the same thing for here. When you want to sell, it's also indicated, the quantity is always indicated in the trading currency, Bitcoin in this case. So this guy wants to sell at $42,028. The price is the base currency, and the total is the amount, the trading currency. Normally you would have very close to each other. That's what you want. These prices, you want them to be very close to each other because it means that the market is efficient and you have people that are really willing to buy at a price that people are really willing to sell. And so they are very close to each other. Of course, they cannot be equal because if they're equal, it means that there's a matching order and this order would be executed. The trading system will automatically find that somebody is willing to buy at the same price as somebody is willing to sell. So it will match. That's called matching. It will put these two orders face to face and then do the execution. So this guy is always going to be lower than this guy. For something like a cryptocurrency, you see that there are a lot of small, not a lot of small orders, it's relative, but a lot of orders of count one. So a lot of price level, for which the count is one, because in crypto, you can set the price that you want up to the very high precision. So here I can make orders at 42,000 to 25 and it will squeeze in between here. In the case of stocks, there are only certain price levels that you can place orders, and therefore the mini orders will be batched at the same level. When that's the case, they are simply queued by time of arrival. So the order that is oldest on the exchange will be executed first if there are multiple orders that could be filled at the same price. So that's pretty much it for this stuff here. Now, if you want to place the order, you go to this stuff here, and you have this little panel. Right? Your choice here, there are many of them, but mainly what you want to do is a limit order. The limit order means that you set the price, and if you're saying that you want to do a buy order, you are willing to buy at that price and below. You don't want to have this order executed if the price is higher. So you set both the price and the amount. For the market, you only set the amount, and the system will execute at any price as long as there are any some orders on the outstanding in the market at the opposite side. It's a bit dangerous because if the market is very liquid, if there are very few orders on the other side, you may end up being executed at the price that is very, very far from what you wanted. So I highly recommend that you don't do market orders, that you just put, if you want to be executed right away, you still set a limit order, but you set it at the price that is the best price on the other side. For example, if you want to buy Bitcoin, then I would set the price to be 42,028 because I see that there's one order of sell order at that price, and somebody is willing to sell 18 Bitcoin. If I want to buy 1 Bitcoin at that price, I know that the trading engine will immediately match me on that guy. So it's a little bit more work than just saying I want to trade one at market, but I think it's a good habit to have. Then you have other types, stop limit, trading stop. These orders are more advanced, and essentially what they do is if you already have a position for a stop, it means that you want to cancel, you want to go out, you're losing money, and you want to stop your loss. So you're placing an order which is stopping the loss. These type of orders you start putting them when you are more familiar with trading. If you're starting, I don't think you really you should do things manually before you get to do these guys. What you have here, like there's a small check boxes, are different settings that you can change for your order. So OCO means okay, one cancel the other, right? So when you check this guy, you would have a second order. You have two orders actually, which means that these orders make a pair, and if one of these orders is executed, then the other one is not, but they automatically cancelled. So that puts you that makes orders a bit more complicated, but you're basically saying I want to do one or the other. I don't want to do both. And the other stuff is like hidden, means that the order is out there, but it would not appear in the order book. Post only. Okay, so post is a bit interesting because it's a concept of maker and taker. When you place an order, right, you can either place an order in a way that the order ends up being on the order book. So for example, now if I want to buy something and I put a price that is lower or equal to 42,046 and I buy, I know that currently nobody is willing to sell at that price. So my order will end up on the order book. It will not be executed right now. So that's maker, right? You're making the market because without you, there will be nothing in there. So you're actually providing offers. If you're buying, but you're setting a price that is 42,057 or above, it means that you are going to be executed right away because you have already orders at that price. And then you are taking orders from the order book. You are canceling some of the orders that are up there. In this case, we are saying you're a taker. So you are a maker or a taker. The importance is that the fees that the exchange takes it's not going to be the same. They're going to take less if you're a maker and more if you're a taker, because they want to encourage having actually offers outstanding. If nobody was there, nobody was making orders, and then this stuff would be empty and nobody could actually trade it. Right? Therefore, what you have here is the option to say, I want to place my order, but I want to only place it if it's a maker order. I don't want to actually execute on an order that is outstanding. So you can check that box here. Then the last one is time in force. The idea normally is that your order is going to be valid until you decide to cancel it. There's no notion of a day long order. In normal exchanges, your order will only last a day, and when the exchange closes, then all the orders are canceled. But for crypto, it's lasts until you cancel. But you can change that. If you say TIF, time in force, and you can put a date, then you say that this order will be automatically canceled at that time. The other than that is your regular, what price I want my order to be and what amount. And as we said, the price is always going to be price in base currency, and the amount is always going to be amount in trading currency. Then here they have a reminder of what's the best bid and what's the best ask, which should be the same as what you have here, these two levels here. As a shortcut, you can click on these guys and it will populate the stuff here. So if I want to sell, I click on exchange sell. If I want to buy, I click on exchange buy. And here you also have a slider. So this is our shortcut. If I want to do 50%, if I want to buy 50% of my portfolio. So 50% here, buy, means that the system will see how much money I have in my base currency, in USD, and then it will use half of that amount to buy BTC, to place an order to buy BTC. So I don't really use that too often, but it's maybe good to see a starting point, and then you can adjust this, and then you press exchange buy or exchange sell. So that's pretty much it for the normal exchange trading type. And next we're going to look at margin trading.